Hey, how's it going, everyone? Investors and finance beginners, how y'all doing? NBA Hilson here. We're gonna recap 2021, my performance in my hyperdrive portfolio, how I did, some of the mistakes that I've made, what lessons I've learned, and my expectation going into this year, 2022. Now, if you didn't know, I did a video on recapping my life in this description box below, and I'll link it here. So if you haven't already, please check that out. But investments is also a huge part of my life as well, and that's not really talked about in that video. And so here's this video where I'm gonna recap everything, the most important parts. That's what it is. And let's start off with my portfolio, right? So I made this visual chart in May. I wish I did it earlier in the year. It's so much easier to organize and easier to look at things, the details, instead of just looking at trading, my trading brokerage and all, my platform. So if you didn't know, my portfolio is called Hyperdrive. Why is it called Hyperdrive? I branded it as Hyperdrive because it's hyper growth in a way. Actions to become market leaders, powerful competitor in the business world, and most importantly, significant and positive value to the society. Okay, not just just for money itself. Okay, I'm invested for the growth of the world. That's what it is. Positive growth. So for me, I tracked the market value of everything, also comparing myself to the indexes as well, and my realized gains. And also, it's a very transparent document. And what I'm trying to do is offer you more transparency in my life. I'm not trying to really like hide anything in a way and lie to anyone and all that. I'm just trying to show what I learned and all. So I started tracking this in May, and here's my unrealized monthly returns right here in a chart. It goes through pretty consistent gains in a way, like about 10% every month. It doesn't really change that much, except in November and December where I went through that huge volatility, right? Look at that. To go down 26% in 1 month, yeah, that's pretty massive, but that's also expected because I invest mostly in small capital companies, right? That's what it is. And so you're gonna expect more in the future as well. As maybe I add more big cap companies in the future, you'll probably expect lesser volatility. But other than that, take a look at 2021, my gains, my realized gains. So the ones I've actually sold off. So all right here, I've sold off all these for profits. I haven't had a losing trade. That's what it is, and that's my actually goal for this portfolio and my expectations to go in a way undefeated. That's what it is, and that's me mainly saying that out of the 10 companies I pick, or however many I pick, I want every one of them, and I expect every one of them to give me a positive return over time. That's what it is. And, that's what it is. I spent all this work, and it's trying to accomplish something like called perfection, right? It's a lot of pressure, but I'm willing to go through it. And so, at times you will have a negative trade, or a company that loses money over time, but that's not the end of the world. I'm trying my best to do the best I could to pick out the best companies that will give me good returns over time. So taking a look at this, right? Not too bad, my total realized gains. And then my combined total returns about 27%, right? So you compare it to the major indexes last year, right? Dow Jones, S&P 500, NASDAQ, all about 20 something percent year to date return. That's I beat some of them, but not enough to beat the total returns, which is the ridiculous amount of 72%. Are you kidding me? Look how big these indexes have just gone last year. Like, you can just put money in there and then boom, wow, you'll make some good money. Okay, you don't even need to think. You just put money in there in the beginning of the year. Just don't think about it, and then end of the year, boom, look at that. You don't have to go through all this work that I did and all. But I think over time, I'm gonna win long term versus a short term victory for the indexes. So You know, my goal is to obviously beat the total returns, but if I don't achieve that every year, that's not the end. As long as I become a better investor at the end of the day, right? And then you also look at the companies I've invested in, and I would have to say that's the strongest point and strongest strength of my portfolio. It's I am invested in diversified companies, diversified as in different businesses. Starting off with Avant Brands, a marijuana company, a very small marijuana company, and all that. You have a very good food company, a plant-based food company. All right. You have Galaxy Digital, a company that's heavily invested in cryptocurrency finances, consultations, and institution banking, all that. You have Well Health Technologies, a healthcare company, and then you also have the Good Nature product company, my environmental social governance investment. So super, super diverse, and that's what I love the most about my portfolio. I get to learn so much about each industry in itself. And so I think all of these companies over time will be winners. That's what it is. Right now I'm down pretty heavily on all of them except for Galaxy. That's what it is. Look at that. My total returns, ouch, from 6% loss all the way to 42%. Woo. So that's tough right now, but I think this year they're gonna definitely recover. And it's hard for me to imagine seeing them even in worse conditions. Like, that's what it is. Like, I don't expect that. It was because of the small market capital companies sell off that made all these huge drop, right? So that's what it is for my Canadian portfolio. So far, to start off the year, down negative 13.8%. Ooh, that's not good, right? That's not really good. But it's a new year, new me, new battle. That's what it is. That's what I like to call it. All right. So that's my Canadian portfolio. Let's move on to the US portfolio. Okay. Boom. Here we go. So speaking of diverse investments, more diverse investments, right? I'm obviously invested in more companies here, but it's a lower amount in a way in terms of money, but it still matters just as much. Okay. Start off with Revolve, a retail company for Gen Z and millennials. That's one of my favorite investments. And honestly, all of these investments I pay close attention to. I'm not like someone that, I put money in that company and then I don't look at it, I don't follow it and stuff. I don't invest in like 20, 50 different companies. I actually invest in about 10 companies and I know them well. That's what it is. That's my strategy, knowing these well. And they're all in different industries in a way, right? So you look at MP Materials, a materials company, right? Helping electric vehicles, making magnets for them, as well as solar turbines and all that material stuff. Corsair Gaming, a gaming company. That's what it is. They are one of my favorite products as well. Tattooed Chef, a plant-based food company. Lemonade, an insurance technology company. All right. Skills, mobile gaming development company. Roblox, a technology company in the gaming space. And then you have Astra, a space company. Okay, so I think I'm invested in about like at least 10 different industries. That's what it is, and it forces me to learn more about each industry, and that's what I love about it. I can obviously add more to it, but it's like there's so much for me to learn and keep track of. I think this number is kind of perfect in its own way. There's a higher chance of me selling off some companies instead of me adding some. That's what it is. Because 10 is a lot, right? 10 plus is a lot, especially for me. I have my own job. I have to go to school. I have other projects as well. So that's enough for me. And so, like I said, a new year, new me. And let's actually take a look at the US performance, which is kind of different compared to Canadian performance. You look at it last year, it goes through even higher volatility in a way. Look at that. Lowest from 18% all the way to as high as 55%. Wow. Okay. And here's my realized gains. I don't really do much transactions in a year. That's what it is. Selling off Nordstrom, Tapestry. My only losing trade was Nordic American Tankers. I talked about it. My worst investment ever. That's like, I hate this investment. But it taught me a lesson that you shouldn't invest in just hype. And I invested this in 2020 during the coronavirus period at a really high cost. So that's a big lesson for me. I'm glad I got out and invested money into something else that I sincerely support. So yeah, total combined returns about 58%. So not too bad this one. We beat two of the indexes return combined. That's how strong this portfolio is, and it's mainly because my Revolve company, this retail company, is very transformational, and I can definitely see definitely a 10x profit opportunity. And this is a company where I'm holding for a long term. They have all the ingredients to be a very, very successful retail company for the decade, the top retail company for the decade. And so thank you very much for just tuning in today, just checking out my portfolio in a way. What are some of the lessons I've learned? Let's talk about that. Last year, I would have to say, I went too aggressive in the beginning when when my companies were going down in cost. If I didn't go aggressively buying in, I would have saved more funds to buy more in the December time when everything was much lower. So that's something I need to learn. I'm heavily invested, so I'm only about 5% cash right now, and ideally I wanted to be about 20 to 30. If I played it smartly, I would have been at 20 to 30% more cash, and I could buy more things. That's what it is. But it's a lesson I've learned, and I know these companies are gonna recover. And once they recover to similar costs, I plan to sell them back out for like a little bit of profit or whatever, and get some cash back, because I need cash. That's what it is. And I've used too much. I used too much too fast. That's what it is. Another thing that I've learned is that to really put in the time to learn cryptocurrency. That's what it is. Even though I didn't know too much about it in 2020, I learned a lot in 2021. Trying to understand what DeFi is, staking. I even joined a cryptocurrency club at Langara. If you're listening, hey, you've been really, really helpful in my knowledge about it. And yeah, I still have so much to learn. And going to this year, 2022, it's my goal to invest in a cryptocurrency itself. Whether that's Bitcoin, Ethereum, VeChain, whatever it may be, Dogecoin and all. It's my goal to invest in one at least. So trying to learn more about it in the way. So that's what it is. I've been talking a lot. I hope you've all enjoyed this video, and hopefully all the companies that I've talked about today, not really in depth, but just roughly talked about it in a way. I hope it gives you more ideas and inspiration for your investments as well. These are all companies that I truly, truly love, and they represent a big part of my life as well. So thank you very much for just checking out the Hyperdrive Portfolio 2021 recap. 2022, no guarantees it's going to be better, but I have a feeling it's going to be. All right? Happy trading, all of you, and wish you all the best in whatever you do. Take care. See you soon.